Hello and welcome to Martyn Lucas Investor. My name is Sensei and you're watching the Morning Forecast Show. With today's special is on inflation. CPI data is coming out. That is the most common, most looked at inflation data. What does the Fed prefer? Well, the Fed definitely looks at CPI, but they prefer PPI. That's coming out tomorrow. Either way, CPI is a very important inflation data collection method. This is the way that a lot of market participants will judge how inflation is doing. Is it heading back to its 2% target? Is it going higher? Is there going to be rate cuts? Is there not? And especially in regards to rate cuts, one of the biggest things we covered at the end of last year was the Federal Reserve minutes. Those minutes gave us an inside look into what the Federal Reserve was thinking, why they chose to cut rates, why they're only choosing to only cut rates one time in 2026, or that's the forecast anyway. And that report told us that the only way they're going to cut rates is if they see inflation data, CPI, PPI, PCE. Sorry, the Fed prefer looking at PCE, not PPI, but we're going to look at PPI because that affects CPI and that affects PCE. Anyway, they said that they'll only start cutting rates if the data for inflation is going down and the data for jobs, unemployment is going up. So is today the day we get inflation really start coming down, or is it going to be worst case scenario where inflation CPI is higher than consensus, higher than the Fed forecasted, and we actually have to keep rates where they are, or even worse, are we going to be back on an uptrend in CPI and see inflation get away from us? And that would mean the Fed might need to raise rates. All of those questions will be answered in today's show. The data release is very close to us. We've got the countdown now on. The countdown is showing 48 minutes and 44 seconds. So we'll be covering that live on the show. Thank you everyone for tuning in. If you haven't tuned in, if you haven't hit the like button yet, please do that. It takes 1 second. It helps massively. If you haven't subscribed yet, please do that as well. Let's go over to our morning forecast newsletter. This goes out every single day alongside the show. Plus, you get the Sunday XRP Weekly. Plus, you get the insights with the training course and the portfolio challenge coming this month. So that link is the first link in the description. It's also in the live chat. There's a free plan as well. Go check it out. So let's go into our first top stories. Then we'll come back to CPI and tell you all about that. So, Department of Justice has subpoenaed Federal Chair Powell. I'm actually going to play that video for you as well in a second. We played it yesterday, but it's more relevant today as well. So the Department of Justice subpoenaed Federal Chair Powell. Escalating political pressure on monetary policy and testing U.S. central bank independence credibility. This is not good. Whether you love Trump or you hate Trump, what has happened to yesterday or Friday last week, we got the news of it Sunday evening. What happened there causes uncertainty. It's the Trump administration going after an independent body. It doesn't look good to the rest of the world. It doesn't look good to the independence of the Fed. It's not certainty. The market doesn't like it. And what it started the Sell America trade. That trade has started again. That happened at the tariff time. It's happening again. The dollar's weakening. Gold and silver closed at all-time highs last night, all-time high candlesticks on their daily candles, the highest ever daily candle close on gold and silver. The dollar index was down. Other equities around the globe were higher than the US. So the Sell America trade is back in action because of this uncertainty caused by the Trump administration. I'm not saying it's not warranted. I'm not saying Chair Jerome Powell has not used funds in a fortunate way. I don't think he has. He did. Remember, Trump was the one who nominated Fed Chair Powell. Remember, everything they did with that building had to go through Senate. So there's a lot of questions being raised. Is this going to really reignite that Sell America trade? We'll come on to that in a second. AI data centers overwhelmed PJM's grid. crushing reserve margins, lifting power costs, and forcing hyperscalers towards self-supplied energy. So what we're looking at here is AI data centers. Remember, I said AI is going to completely change the world. This is one of the first things I ever said when I came on this show maybe 3 years ago, alongside the gold and silver trade. Essentially, AI is going to change the world. It hasn't really changed the world yet, but I imagine in 3, 4, 5 years' time, when you look back on the world, you would say there was a time before AI and there was a time after AI. Very different to, let's say, the dot-com era when these companies weren't making money. Very different to 2008 when where housing bubble was caused by all sorts of fraud. And I'm not saying we're not in a bubble, but I'm saying the AI is certainly very different, in my opinion. We'll see if that stands the test of time or it's never different. We'll see. But AI, I think, has a lot of growth left in it. And when I look at AI, instead of just looking at the big, magnificent seven, I also look at the infrastructure behind the scenes, the AI data centers, the power grid. And when I start that portfolio challenge, which we've essentially started now, the first newsletter will be coming out maybe in the next couple of days regarding that. We will start looking at AI infrastructure, power grids, and see where is the most undervalued area within AI. Severely overvalued in most places, but there are it can be overvalued for a long while. So we've got that grid issue. A lot of people are saying these AI data centers shouldn't be into the main power grid. It's pushing everyone's costs up. They should have their own power systems. And maybe I agree with that sentiment. Anyway, the next story is Trump proposed a 10% credit card rate cap. That's rattled the banks. It threatens JP Morgan's card economics and tighter lending standards. We have had the first earnings underway. I think it was JP Morgan this morning. I like the proposal of a 10% credit card cap, but obviously the banks won't like that. Trump threatens 25% Iran-linked tariffs. That was breaking news last night. We put it out straight into the newsletter last night as well. It risking US-China trade rupture as markets await Supreme Court authority ruling. That will be coming up this week as well. We'll be covering the Supreme Court ruling. ExxonMobil calls Venezuela uninvestable post-Maduro, while Chevron quietly gains advantage with existing infrastructure and preferential positioning. Remember, during that press conference with the major oil companies with Trump, ExxonMobil directly said to Trump, all well and good, you putting this together. However, you've made Venezuela uninvestable. Trump didn't like that. And Trump is saying, actually, Exxon, you might not be allowed to invest in Venezuela anymore. That's one of the top stories. All of these stories are dived into deeper within the newsletter. And then, of course, the story of the day is Department of Justice, Powell clashing amidst this CPI inflation data coming out in 42 minutes. So let's get into it all. If you have just tuned in, please do hit that like button, subscribe if you haven't done so already. Let's have a quick look at the live chat. Let's see who's with us, and then let's go on to the main event, which is getting ready for that CPI release, what it all means, how to prepare for it, all the numbers that matter. We'll come on to all of that. Let me get this ready as well. This is Jerome Powell coming us. I'll share that in a second. Let's go to the live chat. Okay, who was with us first? We had the Patrick Black. Lovely to have you here. Bitcoin's Craig wants the number one crowd. Lovely to good morning to you. Taylor is here. Paul D says, just got the newsletter should start any minute. Yeah, that's always a great gauge. Paul D, thank you very much for being a subscriber to the newsletter. There is a free newsletter, there is a paid newsletter. You can sign up to either. The link is in the live chat. Good morning, guys and gals. Good morning from Fort Lauderdale. Bounce back. Welcome, Guy Kemp. Welcome to the show. Gordell Lads says, what a CPI good crypto pump today. What we want for a good crypto pump, for a good stock market pump, is CPI to come under consensus. What do I mean by that? Well, consensus, I'll show you in a second. I'll bring you all the numbers in a second. But essentially, if it's below consensus, it means the Fed doesn't have to worry about inflation, really. It's on track to come down to 2%. Inflation is not getting out of control. And if inflation doesn't get out of control or it's trending down to its 2%, it essentially means they don't have to worry about inflation. If they don't have to worry about inflation, they're not going to have to keep interest rates steady. They don't have to raise interest rates, and they can start lowering interest rates, which is obviously injects liquidity into the markets. Lost Not Yet Found Too says, I'm ready to be enlightened from the wisdom of Sensei. Thank you very much. Welcome to the show. Yolanda says, good day, Sensei and everyone. Yolanda, thank you for all your support as always. Guy Kemp says, what reason is there to expect inflation to be lower? Did something happen to influence that? We'll look into the numbers and what I expect. However, it's actually a very important inflation release because remember we had the shutdown. During the shutdown, we didn't actually get any CPI collected. Then we had one CPI print, but that CPI print wasn't the full print. The last CPI data release we got in December didn't give us the full picture. There was data missing. There was something else wrong with it as well. There was data missing from that CPI release, so it didn't actually paint the full picture. So we haven't actually got a proper CPI release in 3 or 4 months now. And if we haven't got today's number is going to be a bit more volatile. I don't think we're going to get the consensus number. I think we're either going to go above consensus or below consensus. I think there's going to be volatility on this inflation release because I don't know how anyone can accurately predict this CPI when we haven't really got the last 4 CPI prints. Some of it was in the shutdown, some of it didn't have accurate figures. So today will, I'm sure, bring a lot of volatility. Bitcoin's Craig says, we need all the SPI figures to come in less than forecast, if any chance of a pump. Yeah, CPI, not SPI. Yeah, you're right. If you want a pump, you want it to be less than consensus. Why do you expect CPI to be lower? I don't expect... why do I expect CPI to be lower? I don't know what's going to happen. It could be higher, it could be lower. I just know it's going to be volatile and I want to be prepared for it. We're always prepared for it, whether we're trading it. Normally, I sometimes look at the cheat sheet and if it's, and it's always in the newsletter, if I get a number wildly outside of consensus and I know exactly what that means to the market, sometimes I put a quick trade in, make a quick buck. Most of the time, I just want to be tracking this so I know for my long-term investments what's right. And sometimes the market moves in the opposite direction than you think, and that also allows a trade to take place. So I don't know I don't predict the future. I might have general thoughts about the future in regards to AI or crypto. That's me. That's my version of predicting the future. I don't predict day-to-day prices. However, if the data presents in front of me, and the market's going the complete opposite direction, or I know exactly where the market's going to go once the data is released, then I don't mind being a bit late, but at least I'm not guessing at that point. So I'm not expecting CPI to be lower. I'm not expecting CPI to be higher. I might have a small thought about it, but I don't trade based off a small thought. I trade once I get the data or with the general thesis I'm building based off every other CPI release. Where is the market? Where do I think inflation is going in the long term, rather than where is it going in this specific data release? I look at every single data release because it's so important. I look at it because even the Federal Reserve in their last FOMC minute said that's the only thing they're going to be looking at, and that's the only reason they'll cut rates. I also look at it to build a picture of my long-term investment. I also look at it in case it's a very extreme CPI release where it's very out of whack from consensus, because then I can also take a quick trade. Many reasons I look at it, but I don't predict the future and just make a guess the day before and trade based off it. That's not how I do it. Rhino Skin says, hi everyone. Yolanda says, good morning, David. If that made sense to you guys, can you put yes in the chat? If that made sense of my analysis of the CPI, how I look at it, my predictions based off it, why I don't predict it. If that all made sense, what I just said in the last 2.5 minutes, please can you put yes in the chat? I want to know if that made sense, because that's my general thesis on all these data releases. I want you guys to know if that. I want you to know if that makes. I want to know if that makes sense to you, and I also want to know who's in the chat. So let's say yes or no if that made sense in the chat. Ricardo says, good morning, banana heads. Data we cooked to make it look like we need a rate cut. Got to make Trump look good, Ricardo says. We'll see. Again, my thoughts again on is the data right? Is it wrong? I always think inflation is much higher at this point in time. I always think it's much higher than it shows, just based off how it was in COVID times. The highest we got was maybe 10%, but actual inflation was, in my opinion, if you look at something like Chainlink's data, I would say it was closer to 15-20%. I don't think in general the inflation figures are quite accurate. However, that doesn't really matter. That might change my long-term thesis on what I want to invest in. Yes, I want a bit of Bitcoin. Yes, I want a bit of gold because I think inflation's out of hand, just in general because of the money printing. But day to day and year to year, I look at the government figures because that's how the market reacts. That's what the Federal Reserve goes by. That's what the market participants go by. So no matter if you think the numbers are cooked or not, they're still important because that's what the market reacts to. Rhino Skin says, hi, David. Guy Kemp says, US job numbers have been revised down in all 11 months of 2025 by a total of negative 624,000 jobs. That is correct. And Jerome Powell has, in his last FOMC, he did specifically say he expects the jobs numbers to be revised down by 60,000. Sean June says, good morning. David Hensley says, sorry, let's just jump forward. Okay, we are 34 minutes away from CPI release. If you have just tuned in, please do hit that like button. Takes a second. Have you hit the like button? I know a lot of you haven't. If you could hit the like button, that would be great, and we'll give you the full numbers in a second. Where were we? David Hensley says, good morning. Ryan says, hi, David. Guy Kemp says, I think the data we're seeing is less reliable than we are accustomed to. Yolanda says, Sensor, what are your thoughts on BitGo IPO? I haven't looked at it too much. Do you know when the IPO is, Yolanda? BitGo's IPO. Let me know if you know when it is. I can do a piece in the newsletter on it, if you like, Yolanda. Guy Kemp says, appears to me Trump is cooking the books. Mohammed Ahmed says, what are your targets for XRP today? If you become a member or do a super chat, we can have a look for you. It's also in the newsletter. If you go onto that, if you sign up to the newsletter, not only do you get the newsletter going forward, you can actually go into the archive and the XRP weekly newsletter. If you're interested about XRP, if you go to the XRP weekly newsletter, which is part of the main newsletter, you can go into the archive. Just go to every Sunday and you can see all my levels for XRP. I think one of the initial newsletters from 3 weeks ago, I gave you my full long-term and short targets. The last 4 XRP weekly newsletters in a row, we've got the trades exactly right. That's not so that you can go and copy trades. It's just what my thoughts were, and my thoughts were right, more than I expected. So go check out the XRP Sunday newsletter. It's part of the main newsletter. The link is in the live chat. There you go. What are your targets for XRP by this January? Says by this January. I take it week by week. I mean, on the low side, maybe I'm looking at 180. I don't think it's. I think hopefully we're forming a base where we are. But in January, maybe on the low side, 180. On the high side, it's the 13th now. On the high side, 260. But probably most of the time we'll be spending between $2 and $2.30. My trade is setups for the day sent to Discord Premium and YouTube Lecture members and higher. Thank you, Martin. Bitcoin's Craig, that was a comment by Martin. Bitcoin's Craig says, love. Susan Swatford says, good morning. Stefan Mariano says, yes. Oh, you guys, as far as it goes, yes. Okay, you understood. Brilliant. Songs to Space says, imagine a actual war starts. It's over. I mean, we had the 12-day war. We've had wars going on right now, and got the Russia-Ukraine war. The markets continue to go up. Hello, Human Being Liz says, hello, everyone. Songs for Space says, couldn't get anyone to fight for them either. John Doe says, crash. Yolanda says, January the 22nd. Okay, brilliant. Thank you, Yolanda. We'll have a look into it then. Okay, we are 32 minutes away from the CPI release. CPI release this month is going to be very, very important. Remember, it's not January CPI, it's December CPI. So that's... So what is CPI? It's inflation. It's one of the major ways we look at inflation. 3 ways we look at it. Mainly is PPI, which is a producer price inflation, something like that. Where it's you look at the inflation at sort of the companies or places that employ people, the producers, the people that make the products. What's the inflation there? Then the CPI is the consumer inflation. What are consumers? How high is their inflation by looking at a basket of goods? Then we've also got PCE, which is the way that takes out a few of those volatile sectors, and that's what the Fed likes to look at. So those three. So PPI goes into CPI, CPI goes into PCE. Those are the three ways we look at inflation. Not only is that how we look at inflation, that's what the Federal Reserve look at. So CPI will be coming out today. How would I rank them? I would say CPI is a bit more important than PPI, and then I would say CPI is the most well-known way of looking at inflation. It's probably what the market looks at the most. PCE is what the Fed care about the most, but PPI is actually pretty important because it is sort of telling you where CPI is going to be in the future. So all very important, all three of them. PCE is probably the final most important figure. CPI is probably the most looked at figure, and PPI is probably the most underrated way of looking at inflation. Anyway, today we're getting CPI in 30 minutes time. This is actually the first CPI report in the last 3 or 4 months where we will actually have probably more accurate figures. For a certain part, 3-4 months ago, we had the shutdown, no data being released. Last data release was not the full data release. They mentioned that when the CPI came out. So December CPI, which we're getting in 30 minutes time, will be the most accurate CPI we've got in the last few months. Based off what we get on the CPI, if you remember, we looked at the Federal Reserve minutes last month in December. That was basically the behind the scenes of the FOMC meeting in December. And it said, we're not cutting rates unless the data shows inflation is coming way down and the jobs data is not looking good or unemployment's going up. So one part of the puzzle today is, can we get inflation below consensus? If we get inflation below consensus, it shows to the world that the US have got things under control. Jerome Powell is doing a great job. Inflation is trending down to 2%. Remember, the reason they keep rates high is because they want to combat inflation. If they don't need to combat inflation anymore, they can bring interest rates down. So we've got consensus numbers. If it's below consensus, we might get a rate cut sooner than expected. Right now in January, we've got a 5% chance of a rate cut, but we can look past January and start looking at March. The number today will really have a big impact on what happens with rate cuts in March, the next FOMC after this month's one. So let's get into all the data. All of this is happening while Jerome Powell has just essentially got criminal charges been brought against him. Let's have a listen to this before we get into all the numbers.
Good evening. On Friday, the Department of Justice served the Federal Reserve with grand jury subpoenas, threatening a criminal indictment related to my testimony before the Senate Banking Committee last June. That testimony concerned in part a multi-year project to renovate historic Federal Reserve office buildings. I have deep respect for the rule of law and for accountability in our democracy. No one, certainly not the chair of the Federal Reserve, is above the law. But this unprecedented action should be seen in the broader context of the administration's threats and ongoing pressure. This new threat is not about my testimony last June or about the renovation of the Federal Reserve buildings. It is not about Congress's oversight role. The Fed, through testimony and other public disclosures, made every effort to keep Congress informed about the renovation project. Those are pretexts. The threat of criminal charges is a consequence of the Federal Reserve setting interest rates based on our best assessment of what will serve the public, rather than following the preferences of the president. This is about whether the Fed will be able to continue to set interest rates based on evidence and economic conditions, or whether instead monetary policy will be directed by political pressure or intimidation. I have served at the Federal Reserve under 4 administrations, Republicans and Democrats alike. In every case, I have carried out my duties without political fear or favor, focused solely on our mandate of price stability and maximum employment. Public service sometimes requires standing firm in the face of threats. I will continue to do the job the Senate confirmed me to do, with integrity and a commitment to serving the American people. Thank you.
There we go. That was Jerome Powell responding to that Department of Justice probe. So the Department of Justice has targeted Federal Reserve Jerome Powell. A lot of people rushing to support Jerome Powell at this point. They don't like the uncertainty. They don't think he's done anything illegal. Yes, the spend is too high, but it was all put through Congress. This just creates a lot of uncertainty in the market. It's pretty much unprecedented that this has ever happened. And a lot of people are saying that this now politicizes the Fed. If they don't cut rates, then Federal Reserve Jerome Powell might be sent to prison. That's essentially what people are saying. I don't think it's as extreme as that, but yeah, it does look like they want Jerome Powell to cut rates, and they are on surface level anyway. It looks like if they're going after Jerome Powell because he's not cutting rates for them. And Jerome Powell in that message made it very clear to the world, to the markets, that he will only cut rates no matter how much he gets threatened when he thinks it's right. That's what's going on behind the scenes of everything. So let's scroll down in the newsletter towards that deep dive we've got on the CPI. If you haven't got the newsletter yet, as you can see, you start off everyone gets at least the first part for free. The link is in the live chat. You get all the top stories of the day at a glance. You can really start understanding what's going on in the markets. There's no ads. You can there's no paid promotion. I'm not being paid to write these stories. I'm bring you the most important stories every single day. You don't need more than 5 stories. You don't need less than 5 stories. You get exactly what you need. You've got the one big thing, the most important story, the fear and greed every single day, the number that matters. Today's number that matters is 2.7%. Market consensus for headline and core year-on-year figures sits at 2.7%. This statistic serves as a primary benchmark for the Federal Reserve's independence, the viability of the project, and projected June 2026 interest rate easing cycle. So today's big number is 2.7%. Why is that the most important number? Well, this is where we're going to get the data straight away. We'll also be looking at Bloomberg when that comes out. So in 25 minutes time, we get CPI data year on year, month on month, excluding food and energy, year on year, excluding food and energy as well. Both of them are the same. So the year on year number, the consensus is 2.7%. The month on month number is 0.3%. So all you have to do is look at 2.7%. Is it going to be higher? Is it going to be lower? And if you really want to boil it down to the ease of it, if it's lower than 2.7%, brilliant. Inflation's coming down. The Federal Reserve can afford to cut rates. If it's higher than 2.7%, that's not good. Inflation's higher than the market expected. You can expect sort of a dump in the markets. The further away, the further the deviance is from that 2.7 figure. If it's at 2.2%, if it's at 2%, then the markets will go wild to the and pump. If it's at 3.5%, inflation at 3.5%, so markets will crash 10% of the day. So the further you are away from the consensus, the more violent that reaction is going to be. But the number you need to focus on is 2.7%. As soon as you hear the number, for example, if it's at 2.7% and I hear a number of 3.5%, if I'm there within 30 seconds, 5 seconds, whatever, I'll probably be shorting the market. But then you need to remember shorts get liquidated and then it quickly goes back towards the upside. Anyway, you have to be experienced to do trades like that. But essentially, if it's higher, then the markets will crash. If it's lower, the markets will pump. That's if you really want to simplify it down. And it all is based off that consensus number, what's already priced into the markets. What's priced into the markets is a 2.7% figure, but that hasn't come out yet. So no one actually knows what the figure is. But that's what the market, based off educated guesses and analysts, are forecasting. That's the number we need to hone in on. That's the number that will change in 22 minutes time. You've got the winners and losers. See what's trending in the markets, what's moving. Is it your favorite stocks? Are you looking at the losers? Are you looking at the winners? What are you going to buy? What is the news in the markets? Very easily you can see what the top movers are in the market. Market snapshot as well for your favorite indices. Then the 5 things you need to know. So the Fed independence war goes legal. The Department of Justice has served Federal Chair Jerome Powell with grand jury subpoenas over his 2025 testimony related to the overruns at Federal Reserve's Washington headquarters. While the Department of Justice frames the probe around hundreds of millions in renovation overruns, Powell has publicly called the investigation a pretext to pressure the Fed into accelerating rate cuts. There's more on that story and my thoughts there. We've got the AI data center story. This is something I'm really looking into to see where my money is best put. is it in the Magnificent Seven, or is it something behind the scenes like AI data centers? So there's a story in the newsletter on that. There is the Trump 10% rate and how that's going to affect all the banks' earnings this week. Remember, we're covering Bank of America tomorrow morning. Martyn will be covering that live on the show. And remember, Bank of America, Martyn has sources indicating that Bank of America are working with using XRP, and we're going to see if there's any mention of that in tomorrow's earnings. Last time, I think we started hearing Bank of America talk about crypto and stable coins and how they're integrating that. Is this time round where they start really mentioning maybe Bitcoin, maybe XRP? Trump 25% Iran tariff threat. That's one of the top stories today as well. And then Exxon. Trump specifically, to quote him, said Exxon is being too cute. Essentially, ExxonMobil said to Trump, Venezuela is pretty much uninvestable with the laws, the way you've gone about things. We can't invest in Venezuela, or it's very hard to. And Trump said, well, you're not very grateful of this, so we're not going to allow you to invest. Essentially, that's what's going on. A lot more within that story. Then we go over to our deep dive, normally reserved for our premium members, alongside the chart of the day, alongside the chart training program, and also the portfolio challenge as well, which is starting soon. So let's go on to deep dive, all about today's CPI release. If I can just ask everyone, if you have just tuned in, I'm going to talk, the next 20 minutes is all going to be about CPI. So you're going to get everything you need to know about CPI. But I just ask you to do one thing. Maybe maybe three things. Hit the like button. It takes 1 second. Have you done it? Literally takes 1 second. So I might pause for 5 seconds while you do it. I'm waiting. Some people still haven't done it. I can see the numbers and people are still not hitting the like button. It takes 1 second. If you can do it, that's greatly appreciated. If you haven't subscribed, please do subscribe. If you want the newsletter, there's no reason you shouldn't want the newsletter. At least try it out. There's a 1 week free trial for the premium plan. There's also just a free plan. There's a monthly plan. There's a yearly plan. You've got all the choices you need. Go and sign up to the newsletter to get all of this information. The link is in the live chat. It's also the first link in the description. Let's come on to the December 2025 CPI. Remember, we are obviously in 2026, but the CPI is based off December. Jerome Powell has a lot going on with the investigation, with people saying cut rates, with people saying don't cut rates. But the one thing we know is it's all going to be data-based. He's made this very clear. He said that in the speech that we just looked at. He said that in the Federal Reserve minutes. He says it every month, but now it matters more than ever, because everyone last year knew that Jerome Powell should be cutting rates. Everyone knew the rates were too high. He knew the rates was too high. Trump knew the rates were too high. Every analyst around the world knew that the rates were too high. The point of bringing rates down is to bring it to a neutral rate. That neutral rate controls inflation, controls the jobs market, and if they're both under control, then then they're at that neutral rate. Everyone knew the neutral rate should have been lower, but now we're in 2026. Not many people think there should be too many more rate cuts. Some people say we're already at the neutral rate, so the interest rate we're at now is already neutral. You shouldn't cut it anymore. It's keeping inflation under control, and it's the economy is great, and the jobs market is pretty strong as well. So there's no need to cut rates. Some people say you need one more rate cut. If you're looking at the Federal Reserve and all the participants there, if you look at the dot plot, the Federal Reserve itself only thinks there'll be one rate cut in 2026. Now, what does the market think as a whole? The market, where we can go over to the Federal Reserve, the Fed Watch tool. The Fed Watch tool is suggesting no rate cut in January, and in March it's suggesting actually there's only a 25% chance of a rate cut now. If we go all the way up to December of 2026, what is the market actually pricing in now? Well, the market is pricing in, if you look at this chart, what's the biggest bar? The biggest bar is 3 to 3.25%. We're currently at 3.5 to 3.75%. So the Fed's pricing in one rate cut. Analysts are saying we might already be there. Some people in the Federal Reserve might be saying we're already there. Some analysts say we need a lot more rate cuts. But the market is saying, which takes into account all of that there will be 2 rate cuts this year. So if you look at this bar over here, this is the biggest bar. There's a 32% chance that by December of 2026, the rates will be at 3 to 3.25%, essentially meaning by now, until the final FOMC, or including the final FOMC meeting of this year, there would have been 2 rate cuts. However, it's not that clear cut. There's only a 32% chance of that. So there's actually if you add up all these percentages, so 54, 63, 65, there's basically a 66% chance that there will be at least 2 rate cuts by 2027. At least 2 rate cuts. 66% chance of at least 2 rate cuts. There's about a 30% chance or 32% chance that there's at least 3 rate cuts. There's about a 10% chance that there's at least 4 rate cuts. And there's actually an 8% chance that there's no rate cuts, and 25% chance that there's only 1 rate cut. So we're spread pretty thin at the moment. No one really knows where we're going. My best guess would be aligned with the market. The Federal Reserve think there's going to be 1 rate cut. I think inflation is going to come down. I think the jobs market is going to be pretty strong, but also weakening slightly. So I would say there'll be 2 rate cuts this year. That's my thoughts. 2 rate cuts this year. But again, it's all data dependent. If CPI comes out in 15 minutes and it's 3.5% or 3.3% or 3.1% or 3%, then all of these probabilities will change. So the Federal Reserve, because it's so tight now, we're not looking at 5 rate cuts, 6 rate cuts, 4 rate cuts. We're looking at either 1 or 2 rate cuts this year. So it's very tight, and when it's very tight, it's all going to be data dependent. Analysts are already disagreeing about, is there supposed to be 1 more rate cut or no rate cuts? No one's saying the neutral rate is a million miles away. Everyone's saying we're pretty close to being at that neutral rate. And remember, the neutral rate is where they will sort of keep interest rates at, because it controls the jobs market and the inflation. So everyone's saying that's pretty close. We're pretty much there. That means it's all going to be data dependent, just like they said in their minutes, and that's why we're covering the CPI. So if you want to know when the next rate cut is due, or when the market's expecting it, well, it's not in this month, it's not in March, it's not in April, it's in June. So we might be waiting 6 months or 5 months for the next rate cut. But again, all data dependent. A lot of data can come out before then. Today's CPI can change the needle on that as well. And now we're 14 minutes away. Don't need now just the pure truth. What's a good percentage CPI today? Pump crypto guys, please say. We'll come on to that. So again, the big number today, as it was the number of the day in the newsletter as well. A very important part of the newsletter that you can just quickly see what number is most important, and it normally sticks with you and you can understand it. Anyway, the number of the day in the newsletter was 2.7%, because that's the consensus. So if you've just tuned in, 13 minutes time, we're covering CPI, please hit that like button. The number you're looking for is 2.7%. That's the consensus number. If it's lower than that number, if it's 2.6%, brilliant, inflation's lower than expected. If it's at 2.7%, no real problem. The market might buy that up because they might have been hedging against a bad inflation number. 2.7%, it's pretty stable. If you take away tariffs from 2.7%, which they're transitory, people would say, so a year's time, you can see if you take away 0.6% from that, you're at the 2% goal. So 2.7% is not a bad number. However, if we're starting to go 2.9% or 2.8% or 3%, then the market won't like that. Inflation is too high. They won't need to cut rates. Now, if you're at 2.6%, the market might like that. If you're at 2.4% or 2.3%, the market will love that. And if we get something like a 2.3% inflation number, then I would expect the crypto market to possibly jump 10%. Even Bitcoin can do 10%, XRP can do 10%. Some others might do more. If we get inflation data at 3.5%, then I can expect XRP and Bitcoin to drop 10% or even more. So it depends how far away you are from 2.7%. So that's what. Let's go into the deep dive. So the release of the December's 2025 Consumer Price Index (CPI) marks a critical reset point for global markets following a 43-day government shutdown that blinded the Bureau of Labor Statistics, that's the BLS, in October and distorted November's data through holiday discounting. Today's report offers the first clean reading of the US inflation trajectory over the next in over 60 days. So last 3 months, or last couple months, last 3 months, depending on how you want to look at it, we had the shutdown, didn't really get the data. Then we didn't get October data. In November's data, it was not clean data. It had holiday discounting, not the full numbers. So today's CPI is the first clean data. Again, is there issues with CPI data collection? Maybe, but it's the first, as clean as it can be, data release in over 60 days. So that's, again, why there's more. We can have the charts on the screen in a second as well. That's why there is more people looking at this as well. I want to just make sure we've got some charts set up for you as well when this comes out. So let's put in the XRP chart over here. We'll go on to smaller time frames so we can be looking at all of this when this releases. This will be XRP on the left-hand side. So let me do XRP over here on the left-hand side. That's probably what I'm most interested in, maybe what you're most interested in as well. Up here, we'll have the S&P 500. Let's see if we can put all of this in the 5-minute time frame. Let's do the S&P 500 over here. So top right is the S&P 500. I'm just getting this set up for in 10 minutes time when we want to see all of this move. And at the bottom, we'll have Bitcoin. I will readjust all of the sizings in a second. I just want to get it all worked out. Okay, that's Bitcoin bottom. Okay, so those are the three charts we're going to be looking at when the data release comes. Let me get rid of this. Okay, let's see if that's saved over here. Okay, I'm just getting ready for in 9 minutes time when we want to see all of this. Okay, brilliant. So yeah, XRP will be on the left, S&P 500 top right, Bitcoin bottom left. We'll come back to that in a second. So yeah, first clean data, that makes it even more important. What also makes it more important is it's all going to be data driven now, and we're very close to the neutral rate. Market participants are currently navigating a complex environment where raw economic data collides with a unique political crisis involving the Department of Justice into Federal Chair Jerome Powell. That's what we looked at over here with Jerome Powell.
Good evening.
Responding to that. This report is no longer just about the cost of goods. It's a barometer for the Federal Reserve's independence and the viability of a June 2026 cut. The next cut we're looking at this moment in time is June. Is this going to confirm that? Is it going to bring it forward, or is it going to push it back? It all depends on inflation and jobs data. Today we're getting inflation data. With consensus expectations sitting around 2.7% for both headline and core, the margin for error is razor thin. As high or low, the market's going to move. Sophisticated investors are closely watching whether this inflationary trend seen in late 2025 was a genuine structural shift or merely a byproduct of shutdown induced noise. We're going to really understand. It's all about the trend. It's not about what the number is. Is the trend to 2%? Right, over the last 2 months, 3 months, we've seen the trend be towards 2%. Were those numbers just skewed? Was it because of we didn't get those numbers during the shutdown? Was it because the November numbers were not full and they included a lot about Black Friday? Well, today we're going to find out. So this is the rate expectations for January. There's about a 5% chance of a rate cut this month. This can heavily change based off the data we get in now 7 minutes. So the key drivers and analysis, the great data reset, moving beyond shutdown noise. The primary challenge for analysts today is the data gap created during the fourth quarter of 2025. Because the government shutdown prevented price collection in October, the November figures were inherently flawed, capturing only extreme discounting of the Black Friday season. This created an artificially cool November print of 2.7% that many institutions believe did not reflect underlying reality of the economy, but the market took it as gospel. The December report serves as the first period. Remember, yes, we are in January. We're getting the December report. Don't let that confuse you. The December report serves as the first period of normal data collection. This generates paid at lower prices. So are they going to reduce their margins and potentially make a loss and potentially make less money, or are they going to pass that money on to the consumers? No one really knows, but we will start seeing it in the consumer in CPI. If CPI goes up, that could be one of the reasons. So Oxford Economics notes that the artificially low levels seen in core goods during November are likely to experience a pop in the December report. If this pass-through accelerates, it can validate a higher for longer interest rate environment, regardless of political pressure. So again, it can be as simple as if it's above 2.7%, that means inflation's gone up, you can the market will go down. If you want to understand why that's the case, why if inflation's high, well, this is the issue. This is why inflation could be higher. This is why higher for longer would occur if higher for longer is about the interest rate. That's why it would occur if we get inflation higher than 2.7%. So here we go. Consensus versus reality. This is what you need to understand. This is how the market's going to react in 2.5 minutes. Final ask. If everyone what's happened? You can't hear me? Because of we didn't get. What's going on? Did Martyn hijack me? Guys, what's going on? What happened? What did Martyn do? We are 2 minutes away now. What was that? Did Martyn come into my stream? He's just hijacked me. He didn't want me streaming this. Guys, are we back? Okay, 2 minutes away now. God, I was saying so much. I don't even know what the moment of realization when Martyn stole your show. Oh yeah, he messed up my show. Thanks, Martyn. So guys, I was just quickly talking about tariffs, the pass through, but ignore it for now because we don't have time. I want you guys to be prepared. So in 1.5 minutes, consensus versus reality. This is what matters. Here's the cheat sheet. You get this every single time any events happens in the newsletter. If you haven't hit the like button, please do that right now. If you haven't subscribed, please do as well. Most important thing, go grab the newsletter. You get 1 week free trial. There is a free plan as well. There is a yearly plan. Go and grab it. There's no reason not to. You get all of this information every day. The hawkish surprise. Here it is. The consensus is 2.7%. In 1 minute's time, we're going to get the full numbers. The consensus is 2.7%. That means that's what the market's priced in. Maybe the market fully hasn't priced in 2.7%. Maybe some people are out of the markets in case it's higher. And if it is 2.7%, the market might still rally. But the main signal here is if it's below consensus, lower than 2.5%, and the further away it is from consensus, the more exacerbated that the reaction will be. So if it's at 2.5%, equities will rally, crypto will rally. If it's at 2%, crypto will explode. If it's at 2.9%, the market will crash. If it's at 3.5%, we will really, really crash. That's what you need to take away. All of the actual information to really start understanding this, forming trends, is all in the newsletter. Of course, Martyn cut me off, so half of it you didn't manage to grab. But what you'll be able to do is go back and read it in the newsletter, start forming a picture. What we're going to do is go over to Bloomberg. They will have it for us. I'll recommend everyone does this. Go to the cogs and press 2x speed. That will bring you up to date with me. If you're up to date with me, you're up to date with the market. So just go to the cogs and press 2x speed. We'll be looking at it over here as well. So 2.7% above my head, 2.7% here. If it's lower or higher, we will see it over here. Breaking news. Good luck, everyone.
Twos, 10s, 30s. Yields a little bit higher off the back of developments in Japan, where yields are a whole lot higher on the prospect of snap elections there. Yields higher here by only a single basis point.
The numbers are out. 2.7, 2.6. I'll tell you exactly what that means. It's better than expected and nothing crazy. But people could be buying this up now.
We have a little bit of a low surprise on the monthly numbers and a little bit of a exact number on the the year over year. CPI monthly up 0.3%. Remember, there were no October numbers, so the November numbers didn't get into this as a month over month thing, but the 0.3 translates into 2.7% year over year. Core comes in at 0.2 gain. That translates to a 2.6% year over year number. There were some expectations we would see a bigger rise in some of these numbers because of the government shutdown and the way things were put together for October and November, but it looks like...
Guys, this is crazy. This is what I told you. I said, let me just mute Bloomberg here because I want to give you the full information.
While you look at how the market's moved.
Well, let's get...
Okay, let me just tell you what's just happened. So the CPI data's out. We got 2.6% on the sort of core, which is lower than expected. Expected was 2.7%. On the normal CPI, we got 2.7. So we got at consensus and below consensus. Nothing crazy towards the downside. However, people were worried it was going to be higher, so they got out of the markets. And if it is going to be at consensus, they're going to get back into the markets. That's an idea we literally just spoke about. And that's exactly what happened. We are at consensus, nothing crazy, but because everyone was scared about it, they were out of the market. Now they don't need to be scared about it. They're back in the market. So let's listen to Bloomberg. If you haven't got the newsletter, you can get all of those informations every single time we have these events. A daily newsletter, XRP weekly newsletter at the end of the week. Go and grab the newsletter. It is free. Let's go back to Bloomberg.
Seeing a massive increase in hiring, but you are seeing inflation come in at the same time that small business optimism earlier this morning actually increased, and that real average hourly earnings rose 1.1% versus the 0.9% in the prior reading. So this paints a positive picture that both increases growth while not necessarily having the inflationary overlay that would stymie the Fed from cutting rates at some point this year. Maybe not this month, but at some point this year.
Let's give that positive picture some more oxygen. So this came from Citi ahead of the print. Andrew Honhorst and the team said, yes, inflation is still running above target, but we expect shelter and goods inflation to cool this year, bringing monthly annualized inflation close to target by the end of 26.
Yeah, and a lot of people who are in the housing market would confirm that and saying that rents have actually gone down year over year in a number of locations, and that the way that they calculate owner's equivalent rent is unique and raises some questions. Look, this all paints a picture of disinflation. Still, though, year over year, we're talking about 2.7%, core CPI 2.6%. So still above that 2%, but maybe not enough above. And the fact that it's on the right trajectory downward might give a little bit of oomph to the doves on the committee.
Closer to 3 than to 2, right there with you, but some better news when you get a downside surprise at 0.2 on core, month over month, against an estimate of 0.3. Mike McKee still with us. Mike, as you look at that downside surprise, which is certainly what this market is trading on, what's behind it?
Well, it looks at this point like a lot of it has to do with gasoline prices down a 0.5% on the month. Most other categories seem to be up, although we did see a drop of 1.1% for used cars. That was somewhat predicted. The interesting thing is housing, as you were talking about, because there was a feeling that the lack of October data would depress the housing numbers and keep them depressed. But we see the owner's equivalent rent come in by 0.3 gain. That's up a little bit, and rent itself up 0.4 on the month. Lodging away from home is one of the biggest movers. Hotels up 3.5%. That looks like it's incorporating some distortion from the government shutdown. And apparel up 0.6%. That's not a surprise. There was an anticipation that the November numbers have been depressed by discounting for Black Friday, so we would see a rebound. And that's one area in which we do see a rebound. Goods prices were flat on the month. Services prices up 0.3. So all in all, a fairly contained report, but we do have to caution that because of the shutdown, there are going to be distortions in this data, and we'll have to figure out which of these numbers are the most distorted.
Mike McKee, just before you go, what do you make of the argument we hear on Wall Street? I want to talk about Shelter specifically, that because of the way they measure inflation, they're missing the story, that ultimately there's a strong tailwind, disinflationary tailwind for the year ahead on Shelter.
Well, there was a feeling that we were going to see more of that in these numbers because of the way they calculate things. We do know it's distorted. It didn't really show up this month. And it's not clear that the tailwind is going to continue because we still don't know what people are going to respond to in terms of mortgage rates, and we're still not seeing a lot of houses built. We get new home sales and new home construction coming up at 10 o'clock, and we'll see if there's any progress made there. It's an October number, but it's the latest that we're going to have.
Mike McKee, appreciate the update. Thank you, sir. Tiffany Welding of PIMCO joins us now for more. Tiffany, welcome to the programme. We'd love your view on one, the data we just got, but two, the
okay, I'm going to give you my full analysis in just a second.
Yeah, well, I mean, it sounds like it was a very mixed bag, as Mike McKee just described. You know, it seems like the softer than expected numbers came really from the good side, and even on the good side, it was very much a mixed picture. So you have tariff-related pass-through that's happening at a very uneven pace depending on industry. So you had electronic products, that appeared prices were down quite a bit, but other things like apparel were up. So it's it looks like a pretty confusing number, quite frankly. You know, and on top of that, you did have government-related distortions because of the shutdown. You know, so I think the Fed will have to parse through this. You know, the way that we read the, the tea leaves more recently is that after 75 basis points of cuts that they've implemented in the second half of 2025, they're much closer to neutral. They're on the higher end of their own range, estimated range for neutral. And as a result of that, with the labor market stable, they're pretty comfortable pausing here to just get more information and see what happens.
It was quite a confusing number, is an evergreen statement for the past 12 months and probably the next 12 months of data that we're about.
Okay, that's enough of Bloomberg. So you can see the markets love it. This is exactly what was in the newsletter. I mean, literally to a T. This is exactly the thing we explored. That even at sometimes you need to understand these things. Even at consensus, you might say, well, if it's at consensus, nothing major will happen. Well, you need to look at the idea that markets sell off for certainty. So people were out of the market because they were worried. They were worried that that inflation will be higher than expected. People were worried that this number of 2.7%, that they were going to get 3%. So they sold off. And as soon as they found out, actually, we're back at 2.7%, 2.6%, that's really good. The number of 2.7% within itself is actually not that bad. So when you get 2.7% again, it just shows, well, it's not the best it could have been. It could have been 2.6, 2.5, 2%, and the markets would have rallied 20%. But it's also 2.7% realistically is not that bad of a number. Yes, there's still issues with the data. Yes, we're going to have to continue looking at every single data release until we get something a bit more, until we can build a better picture. However, we've just passed, it's a green tick. Brilliant. Inflation's under control. That's essentially what we've got today is inflation's under control. Inflation's at manageable levels. If the jobs market's a bit worse, then we can get some rate cuts. So I would expect that rate cut possibilities, the next time this updates, maybe an hour or so, that they'll go up for January. Still, I don't expect a rate cut for January, but they'll increase for January. But that June figure where we're looking at the next rate cut, I think April could be actually when we get the next rate cut, as long as inflation stays where it is now. Jobs data gets a bit, unemployment goes up slightly, but the inflation data was certainly not bad today, and we are seeing the benefits of that in the market now. However, the caution is this wasn't brilliant. It wasn't an amazing. It wasn't all go ahead and buy. It wasn't one of those reports. Sometimes, as I mentioned, when we get these reports and I look at it and I go, wow, this is. Imagine today, consensus was 2.7% and we got 2.2%. I'll be straight on my phone and I'll be buying probably a long a call option, a long position, at least for the short term, because the market would explode. Then it will be volatile. Then it will squeeze the longs or whatever. But yeah, it wasn't one of those events. It was at consensus. It is good. The market's going to be volatile. It's nothing to be concerned about, in my opinion. Now we look at the next data release. PPI tomorrow. So if you watch today, watch me tomorrow. PPI tomorrow, will it be a bit more away from consensus? If we do get it further away from consensus, it'll build a better picture of where we're going in the future. Remember, PPI comes into CPI, so we're getting a glimpse into the future tomorrow with PPI. Tune in with me tomorrow with PPI. If you want to get the newsletter, I'll be doing the same thing I did today, but for PPI tomorrow. It's all in the newsletter, all the numbers you need to look at. This number's good, this number's bad. Keep an eye out for this. What time is it happening? What's the story behind it? Plus the 5 stories you need to know every single day. I'll show you the newsletter here. I'll give you all I did for the CPI today. I'll do it even more tomorrow. So the link is in the live chat, first link in the description. You also get all of this. If you want the free tier, go grab the free tier. There's a free plan. You can get all the top headlines. You still get an ad-free experience. You get the top movers, top stories, the XRP Sunday newsletter, the first ever XRP newsletter. You get all of that. If you want to go one step further and invest in yourself, remember, invest in yourself before you invest in the market, you need to understand what's going on in the markets. You need all those top stories, but you also need to understand the ideas behind the story, the trades behind the story, the charts of the day. You need to understand charts. Whether you're a day trader, long-term trader, an investor, charts are the most important tool in my toolbox. They control my emotions. They let me win. We're going to have the chart course launching this month. I'm not gonna do 50 videos. There will be a weekly live stream every week to answer your questions, but it will be one video, 9 years of knowledge in 2 hours. It's not for day trading. You can use it for day trading. I recommend using it for long-term investing, controlling your emotions. You can use it how you like. I'll tell you how I use it in the video, but you will understand everything about that. It's an additional perk within the newsletter. You get the chart of the day. The charts I'm watching every single day. You'll get my charts. You can request charts. You can DM me one-on-one. You get the deep research pieces on AI, what sectors I'm looking at. I'm starting a portfolio challenge, 5,000 to 350,000. 3 years ago, we did a $7,000 challenge and we got up to close to 100,000. Now, I don't want it to be alerts. I'm not doing alerts. That's not the way I like to do things. I don't give financial advice. I just give you the research behind it and what I'm doing. It's more of my journal. But you get access to that. That's launching this week. You get the debt planner, budget planner. You get the Portfolio Insights app, all coming in 2026. So you've got a lot launching in the next couple of weeks, plus the one-on-one access with me, all the top stories, the PPI full analysis for tomorrow. That's all going to be in the newsletter. Let's have one final look at the markets and then go over to Martyn. I'm going to answer some of your questions as well. I answer all your questions in the newsletter. If you've missed a question, you want to ask me a question, just send me a DM on Substack. As well. Let me get this off the screen. So how is the market digesting this? Bitcoin is up. Silver. Oh my God. If you saw my silver trade, you would be like, how do I understand the markets how you do? We bought silver. I mean, some of you were with me at this time, and I'm sure many people have had great successes in the markets as well, but we had such a great success with silver. Everyone was against us. We bought silver at $20. $18, $15, all at $16, $15. Even this year, we told you the major breakout, $30. Now it's at $87. People called us crazy at $34. People called us crazy at $15, $20. When I went into the gold and silver bullion dealer in Hatton Gardens here in London, they called me crazy for buying gold and silver, $1,500, $20 silver. They called me crazy. They said, everyone's selling now. We're at all-time highs. I said, it doesn't matter if you're at all-time highs. If you understand what's going on and behind the scenes with AI, with inflation, with wars, with the bull markets, with the cycles, with the cup and handle, everything I'm trying to teach you guys, you will understand that silver's going to $100, gold's going to $10,000 over time. The risk to reward is not as brilliant as it used to be, but I'm still very bullish. Silver is now making all-time highs. Ethereum up 1.6%. Oil discovered a double bottom. We put that in the newsletter. Bitcoin up 1.06%. XRP up 0.76%. Gold up 0.46%. The S&P 500 is up on this news. The FTSE's up. The Nasdaq's up as well. So the markets are liking it. Let's see. I will do this all again tomorrow. I hope I'll see more of you on. Sean June, if you ask me that question in the newsletter, I'll ask you. So yeah, we'll do this all again. Make sure you have the newsletter for tomorrow so you can follow along with the PPI data release tomorrow, because that's going to be just as important. Stay where you are. You're going to go over to Martyn's live stream. He's going to be live now with more analysis. So thank you everyone for tuning in. Really do appreciate it. On your way out, make sure you have the last call to go grab that newsletter as well. There's a free plan, monthly plan, yearly plan. This also gives you a 1 week free trial if you want to go for the premium plan as well. Thank you for tuning in. Until next time, take care of yourselves and each other. Stay where you are. You'll go straight to Martyn's show. Bye.